What's up, everyone? In today's video, we're going to be going over why the month of March has the potential to just shake up the markets. So before we get into the nitty-gritty details, we have to talk about what's actually happening in the stock market right now. So far in 2023, it's been pretty good for the most part. We have some stocks like Tesla up 60%, and at one point they were up like 100% or very close to it. So for the most part, it's been a pretty good 2023. But what's worth noting is that most of these gains actually came in January. The month of February for the S&P 500 and a lot of other stocks was not good. There was a lot of selling pressure and a lot of choppy movement, but all that is about to change because we have some very, very important data set to release. But what's worth talking about before we get into the important events that you need to know about, we have to talk about the hidden risk in the market right now, and that is the bond market. So as we all know, over the past year, everything from mortgage rates to auto loans to literally every other type of interest rate has exploded. So if we look at, let's say, the US 2-year Treasury, to start off 2022, this thing was paying 0.77%. Right now, it pays around 5%. That is an insane change for a United States Treasury. That's crazy. Like, we don't really see changes that big over the course of just a year. So that had a lot of impact on the stock market and the global economy. But what's worth noting is that inflation, the war against inflation has not been won yet, and there are still more interest rate hikes for the federal funds rate set in store. And what's worth noting is that last year in 2022, we saw just an insane increase in, these treasuries and other types of bonds. And we're in what goes with that insane increase in yields comes a lot of selling pressure in the stock market. So what we're starting to see right now again is an increase in upwards momentum on bond yields. So basically this is a hidden risk for the market where, let's say, just the stock market news overall is just flat. If we have bond yields rising at a very extreme pace, that is a big risk for the market. And it can definitely bring a lot of extra selling pressure into play. So it's definitely worth noting. Keep a close eye on these bond yields over like the next couple of weeks as they're starting to heat up again in a big way. But when you think of bond yields, like obviously they don't just move in a random direction. There's a lot of fundamental reasons that makes, yields go up or down. And that is where Jerome Powell and inflation data comes into play. So March is actually set to be a very exciting month for multiple reasons and multiple events. But, before we get into that, I've touched on one more thing. Right now, the S&P 500 is just flat. It's stuck. There's no momentum. But that is going to change because of the events we have coming up. So there are 3 main events for March of 2023. The first one happens on 2 days. On March 7th and March 8th, we're actually seeing the Fed chair, Jerome Powell, testify in front of the Senate. So that's big. Basically, anything he says can have a huge influence on the market and the economy. So honestly, there's no way to predict what he will say. But the biggest way to capitalize off of an event like this is ride the momentum. So for example, there's no point in trying to predict what Jerome Powell will say at his testimony, but let's say he says something that spooks the markets, or let's say sparks a lot of optimism in the markets. There's a lot of opportunity associated with riding that momentum wave that follows the testimony, right? So keep that in mind. But that's not even the most important event. We all know how brutal inflation has been over the past year, and we actually get another reading on the inflation data on March 14th before market opens. This inflation data will impact everything from, just stocks in general to, just the policies that the Federal Reserve takes in the future, but it'll also have a pretty big impact on the way yields move. So let's say inflation data comes in really bad on March 14th, that will probably make bond yields explode higher. And guess what happens if bond yields explode higher? The market's going to take a beating. So keep in mind, March 14th will be a pretty big day before market open. We have key inflation data. And then the last and most important event is the basically when the Feds hike interest rates yet again. So on March 22nd, the Fed is set to increase interest rates by 25 25 basis points, there's around a 70% chance of, it being a 25 basis point rate hike, but there's a 30% chance of there being a 50 basis point rate hike. If it is a 50 basis point rate hike, normally the market doesn't like that. But if it's a 25 basis point rate hike and Jerome Powell gives an optimistic outlook, that can be really good for the market. So the main takeaway you need to know right now is that, the market's at a standstill right now. It's not like we have horrible news, but at the same time, there's no good news. So basically, the market just stuck. It's at a major support level, and it's stuck right now, right? And it's just waiting on these three important events. March 7th and 8th for the testimony, March 14th for the inflation rate, and then March 22nd for the interest rate hike, okay? Those three events will be the most important events for March so far, and they will move the market. It's just a matter of which direction and how much. What's also worth noting is even if we look at a couple other technical factors, is if we go to a seasonality chart, historically speaking, over the past 30 years, March has been a pretty good month for the S&P 500. It's mostly filled with upwards movement, but that doesn't mean anything if Jerome Powell comes out and says, all right, we're in deep shit, So keep in mind that even though historically speaking, March is pretty good for the markets, that can change pretty quickly depending on the events we have coming up. And what's also worth noting is if we go to one of my favorite indicators, I wouldn't even call it an indicator, I'd call it a data source, but whatever, same thing. Basically, if you look at S5TH on TradingView, we can see that this essentially represents the percentage of stocks in the S&P 500 above their 200-day moving average. This thing is one of the best resources to use when trying to find a bottom in the stock market. So it works very, very well. And essentially, whenever this data stream gets below 12 or 10, it almost always ends up being an amazing time to buy stocks. The maximum this value can go is 100 because only 100% of stocks can be above their 200-day moving average, and the lowest can go is 0. Right now, we're literally exactly in the middle. We're sitting right around 53. So that just goes to show you that the stock market right now is extremely flat, and it's just waiting on the next wave of news. So keep that in mind right now. Over the next couple weeks, or not, honestly, just until these events happen, I'm just expecting consolidation. The testimony will be big, the inflation data will be big, and so will the interest rate hike. With these events, follow the momentum. Don't try and predict what Jerome Powell is going to say because it's impossible to do that. Besides that, be ready for more momentum and crazy movement. I have a feeling this March is going to be a good one. If you guys are new to the channel, make sure to subscribe. When you subscribe, you'll see my videos more often. And if you are not in the Stocked Up Discord chat yet, make sure to join up. It's that first link in the description in the comments down below. It's completely free. We have a bunch of amazing traders and people in there. You'll also get access to a couple free day trades, popular news bots, and earnings channels. So definitely make sure to join up. It's that first link in the description and the comments down below. Besides that, let's have an amazing March 2023.